Live from Washington, D.C., this is Balance of Power with Joe Mathieu and Kailey Leinz.
The U.S. and Iran move beyond military targets. Welcome to the Friday edition. As American strikes roll into a sixth straight day, dropping 6 bridges, while Iran fires on U.S. bases in Kuwait, Jordan, and Bahrain, sending oil prices higher once again today. I'm Joe Mathieu alongside Kailey Leinz in Washington. Thanks for being with us on the Friday edition. Kailey, it's interesting that none of this seemed to come up last night in the president's address.
No, he largely focused in his address on the question of election integrity and suggestions based on evidence or intelligence, rather, that he was unveiling that China meddled in our elections in 2020, suggesting that Americans' electoral systems may be unsecure ahead of the midterms in 2026. Of course, we don't yet have full evidence to substantiate a lot of those claims. Some of those claims weren't even necessarily new, but previously known information. But yeah, Iran did not feature heavily in that primetime address, but Iran certainly is what seems to have the market's attention today, as once again we are seeing oil prices spiking as this list of targets that the U.S. and Iran are willing to hit seems to be expanding. Yeah,
we'll have a lot more for you on the latest on the war with Iran, which has been somewhat overshadowed by politics here in the United States. State media from Iran suggesting we dropped 6 bridges overnight, which would be a pretty remarkable escalation. The president saying next week it's power plants and other civilian-oriented targets. Iran, by the way, apparently hitting a water desalination plant in Kuwait. So this is starting to reach a new level. Yeah, we've also seen reporting from Axios today that the U.S. is sending more refueling planes to Israel, which could signal that the U.S. is prepared to ramp something up in some way in the theater. So obviously it's a lot that we have to pay attention to, and we'll get into it with Ilan Goldenberg from J Street in just a moment. But we begin, as always, with a check on the markets on this Friday. Charlie Pellet has a look from New York. Hey, Charlie.
Hi, thank you very much, Kailey Leinz. You mentioned oil spiking. Let me put a percentage on that. West Texas Intermediate crude right now higher by 4%. We're at 82.13 on WTI. Brent, the global benchmark, 87.57 right now. Barrel of Brent up by 4%. All of this with stocks selling off, and the SOX just turning around, have been lower for much of the day, but right now we do have the SOX up by just about 0.2%. Do want to begin, though, with the developing story involving Apple. Apple and the U.S. Justice Department said to be in early discussions about settling a 2024 lawsuit that alleges the iPhone maker violated antitrust laws. Our Mark Gurman says the discussions are active. There is no guarantee that the two sides will reach an agreement, and no trial date has been set in the case. We will have Mark coming up for you in just a moment to tell you more about Apple. Apple shares right now down by just about 0.9%. So the Dow, the S&P, NASDAQ, they're all in the red, looking at a sell-off in chip makers again. I mentioned the SOX, bears repeating, have been lower for much of the day. Right now we are looking at the SOX, a little change, but still higher by about 0.2%. S&P down 40, drop there of 0.5%. NASDAQ down 0.8%, and the NASDAQ 100 index down 0.7%. The Bloomberg Mag 7 index, though, down 1.3%. The VIX back below 18 right now. 10-year 4.54%. The 2-year 4.17%. And gold up $41 the ounce to $4,017, up now by 1%. You recall yesterday we did have spot gold trading below 4K. Crude bears repeating, up more than 4% right now. 82.15 a barrel. Barrel of Brent 87.60 right now. Brent crude up by just about 4%. Micron Technology shares, they are rallying right now among some of the other semiconductor names. Qualcomm down 0.1%. Applied Materials down 3%. Intel down by 4%. Golf news. Round 2 of the Open Championship underway at Royal Birkdale Golf Club in Southport in the United Kingdom. Right now, 8 under par on the leaderboard. Australia's Lucas Herbert. I'm Charlie Pellet. Joe and Kailey, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the markets from New York on this Friday. Thank you so much. Of course, the smoke that New York was experiencing and is still experiencing today has migrated down to the district, and Joe and I are experiencing it now. It's creating quite the scene here in Washington, obscuring the Dome of the Capitol, the Washington monuments. After you couldn't see the Statue of Liberty in New York yesterday, it is certainly something to behold. It is not something, however, that the president took the time to address in his primetime speech to the nation last night. Primarily, as we've told you, that was a speech around elections in this country. He did take some time, though, at the very beginning of the speech to touch on other issues, including the economy and the war with Iran. Listen.
I'm proud to report that our country is safer, stronger, and far wealthier than it has ever been before. We're making a record investment in our armed forces. Unfortunately, we're forced to use it now. We are likewise winning big in Iran, and you will see the fruits of that labor very, very shortly.
We seek the insights of Ilan Goldberg with J Street, where he's the Senior Vice President, Chief Policy Officer, having spent years working in the State Department. In fact, was the department's Iran team chief, advising leaders on all issues pertaining to the nuclear program at the time. He served as part of the small negotiating team supporting then Secretary of State John Kerry's initiative to conduct permanent status peace negotiations between the Israelis and Palestinians. It's great to have you back, sir, on Bloomberg TV and radio. Kailey pointed me back to a tweet that you had put up roughly 3 weeks into the war with Iran, in which you listed a number of observations from your view as someone who spent years wargaming these scenarios. All of this still reads fresh today as we essentially reset the clock and go back to the beginning of this conflict, yet both sides are threatening real escalation that would start involving civilian targets. Ilan, is that what's next?
Yeah, I mean, and I think you're right that we are really back to the beginning in many ways. What I argued for, and I did spend years looking at different scenarios and planning for these possibilities at the Pentagon. And when we really looked at what happens at the end of a war with Iran or how it goes, our most central conclusion was essentially this ends up looking a lot like the first Iraq war, going back to the early 1990s, where at the end of it, you're going to have a wounded regime, but it's still there. In some ways, it's weaker, but in many other ways, it's angrier. And then you're just in a new normal where you have instability and bouts of violence, and a war starts every few weeks, or small wars. Maybe it's not full war. Just this is the new normal. And that's absolutely what we're doing. But actually, the one thing I'll say is, it's actually a lot worse than what I'd even predicted, because the one big difference is Iran has a lot more leverage over the Strait of Hormuz and has been able to grab that leverage as a result of this war that none of us really anticipated was going to be as effective. We thought they'd be able to try and close it and use it as a tool, but their ability to sustain that leverage and control of it over time has really been a wild card and has made things even worse. So I thought this was a terrible idea from the start. That's what I wrote at the very beginning of the war for precisely these reasons, that there's no positive way to end this in a way that works for the United States. But it really has turned out to be even worse than I thought it would be.
Well, so if there's no positive way to end it, what in your mind is the least bad way?
Yeah, so I'll tell you, we have three options. Again, they're all terrible at this point. And I don't know if any of them are viable, but this is what I would do. I think the least bad way is cut a deal. It's what we tried to do a few weeks ago with the Memorandum of Understanding. It was a bad deal, but it was better than the alternatives because essentially it's financial bribery to Iran, right? How much money are you willing to give them in terms of sanctions relief, in terms of their ability to sell their oil in order to stop this? We thought we'd given them a fair amount. Turns out it wasn't enough. And there's still, I think, such a desire inside of Iran, both because I think a lot of anger because of the way this all started, especially taking out the supreme leader, but also a desire to really humiliate Trump at this point in the U.S. by demonstrating to the world, don't do this again. And I think that any deal that financially has enough incentives for Iran probably doesn't work for Trump because it's too humiliating. The alternative is military options. Put more pressure on Iran, which is what Trump is trying to do right now. That's the purpose of this blockade and now starting to go even further, attacking bridges and infrastructure. The problem is Iran has shown tremendous resilience. The regime doesn't care that much about the population. It's also capable of striking back and causing a lot of problems for the United States, certainly for American partners in the region, for global oil prices. There's no Trump isn't willing to go far enough to actually change the regime. That's not a real option. And so basically there are no good options. Those are your two possibilities.
Let's talk more about oil prices. You mentioned this in your note going back to March, and this is interesting to rewind the clock. 3 weeks into the conflict, you referred to modeling that you did at CNAS with a group of security, energy, and economic experts. The Strait closed 4 to 10 weeks, with 1 to 3 years, you said, required to restore oil production. Once you factor in infrastructure damage, that sends oil from around $65 at the time, you said, to as much as $200 a barrel before settling back into an $80 to $100 range, which we're actually in right now. Do we still have the potential for $200 a barrel?
I think we overestimated or how much the market, well, maybe I would say we underestimated how much the markets were resilient and the ability to build alternative slack.
But if you've got the Houthis threatening to shut down the Red Sea, this could get a lot more intense.
It could, and a lot of the slack that was in the system 4 months ago, things like the strategic reserve in the United States, things like China reducing its demand temporarily, a lot of those mechanisms are gone. If we go back to where we were at the start of the war and it sustains for a while, yes, I think prices could still really explode. The more likely scenario is, again, we're just in this new normal and prices remain elevated at $80, $90, $100 a barrel, still significantly higher than where we were when all this started in February, and we're all dealing with that. So there's the potential for it to get a lot worse. There's also the possibility that we're just in this new normal of 80 to 90. The only positive thing I'll say long term, everybody's already starting to look for alternatives, build alternative pipelines, find other ways to get the oil out. Saudi Arabia is doing that. UAE is doing that. It's going to take some longer for some other countries like Kuwait and Iraq to do that. They're going to have to, that's like 5 or 10 year kind of propositions. But everybody is now going to look for ways to find ways to get things out of the Middle East without going through the Strait. So over time, this becomes less of a tool of leverage for Iran. It's a depreciating asset.
Well, and of course, there's a lot of political sensitivity around oil prices at the moment because of this conflict. But we also have a lot of political sensitivity around this conflict and Israel's role in it. And I wonder what the view from J Street is right now on the Netanyahu government's continued desire to see more change than has been brought to the Iranian regime and Iran's capabilities, especially at a time and in a week in which the U.S. House had more than 100 Democrats vote to restrict aid to Israel this week.
Yeah, I'd say a couple of things about this. First is, I will just say that Donald Trump is a president of the United States and he makes the decisions to take Americans to war. So it's clear Israel wanted this. It's clear Netanyahu convinced him and pushed him forward on that. It's also, at the end of the day, Netanyahu tried to convince Biden. He tried to convince Obama. They said no. Trump did not say no. So at the end of the day, I put the responsibility first and foremost on this whole disaster on Trump. But it's also true that Israel would like us to go further. Netanyahu would like us to go further. A scenario where you have regime collapse and total chaos in Iran is good for Israel because they're not targeting, Israel. But it's bad for us and it's bad for the rest of the region. It's so destabilizing. And then in terms of that vote this week, I do think that was a very important moment. I don't think Democrats are looking to walk away from Israel altogether. But I think what that vote said was we need a whole new way and approach to this relationship. For years, the American approach has been to support Israel on all things, no matter what. That doesn't make sense anymore. We need to treat this country like a normal country and have a normal relationship. We need to walk away from the blank check, and we need to get to a place where, we have a more balanced and responsible policy towards Israel. And that's where I think we would like it to go. And also where we have a place where we can support Israel as a Jewish democratic state and support Palestinians and their freedom and their rights to, a state of their own. That's the kind of policy I think Democrats are going to push for, and that's certainly where J Street is.
All right, joining us from J Street, where he is Senior VP, Ilan Goldenberg, thank you so much for being with us on Balance of Power on Bloomberg TV and radio as we track developments out of the Middle East, but we're also tracking breaking news here at home. And Bloomberg's reporting that hit just moments ago that Apple is in early settlement talks with the DOJ to settle a 2024 antitrust lawsuit. For more, we turn now to Mark Gurman, our Apple guru, and one of the bylines on this story for more. So, Mark, walk us through what this suit was about, how Apple may have already tried to address it, and what the settlement could look like.
Yeah, so Apple was sued by the DOJ in 2024. The Biden administration at the time was going after all the big tech companies, Meta, everyone got swooped up in this. Apple antitrust violations related to a few things. One was the NFC chip, that's the payment chip inside the iPhone. The DOJ wanted that opened up for any iPhone app, wallet app, finance app to be able to use that chip, not only Apple Pay. Cloud streaming apps were banned, so streaming games over the cloud, the file not being installed on the phone itself. A few other factors related to super apps, so being able to build something like WeChat in the United States. They wanted more interoperability between third-party smartwatches and the iPhone to get some of the same tech you could use with an Apple Watch. Over the past 2 years, Apple has gone line by line, and it has resolved all of those complaints. And so now it wants to settle with the DOJ. And a settlement would look like Apple probably paying some sort of fine, combined with what Apple already did to even the playing field for consumers and rivals.
Just like a rounding error for Apple. I mean, the stock's down 1%. Nobody seems too worried about this on the day that, at least for a moment, topped NVIDIA as the world's largest company.
Yeah, I don't think investors have really cared about this lawsuit from the beginning. I'll be honest with you, it was kind of frivolous, given that 3/5 of the lawsuit was actually about things that Apple had already resolved by the time the lawsuit was filed. Since that happened, they've knocked out the other 2 over the past 2 years. And I'm referring to the 5 items that I listed out in terms of the main bullets as to why the DOJ was filing this suit.
What do you make of the stock recently, Mark? It's not often we get Gurman on the air here. This is like a celebrity journalist who breaks news in his sleep. The fact of the matter is this company has been rewarded for not jumping into the pool and overspending on AI. At one point, people thought it had been left behind. Now it's being rewarded for not taking part?
They're being rewarded for falling bleep backwards into not spending on AI. They've completely failed in artificial intelligence. They're only starting to pick up the pieces. I think there's a lot of optimism on the stock because we've been talking about this major new product portfolio that's coming. Got a foldable iPhone, new home devices, new AI wearables, and I think there's a lot of excitement about what's to come hardware-wise. Remember, 80% of Apple revenue comes from the products, the devices that you can buy, and there's a lot to love about the upcoming stuff.
Well, and of course, the purchase price of those devices is going to be higher because of the memory chip shortage. Right, Mark? Is there any indication that they're going to be able to backtrack on that, or is Apple simply not able to get what it needs cheaply enough at this point?
Yeah, the ship has sailed. Prices are not coming back down, even if the memory situation is resolved. They're going to get some pressure relief on that by moving to memory chips for China-sold phones, in all likelihood, from 2 of the Chinese memory suppliers. Apple has been trying to get sort of a quasi-blessing for the Trump administration on that. I think they're good to go there, so they're testing that. We'll see if it ends up happening. The other factor here is that the products are going to get better. And the other thing to keep in mind is the consumer of iPhones. I don't really know that they care that the price is going to go up a couple $100 in September. They'll pay on installments. They'll figure it out. It's a very...
As long as the camera's better, right?
Well, the camera, but also you got the foldable coming. That's pretty exciting.
That's going to be huge. Come back and see us when that takes place. We don't get to talk to Mark Gurman every day, managing editor for consumer technology, chief correspondent for Apple. And the shares right now, as we mentioned, are down just a bit, 1%. We'll keep tabs on Apple stock as we make our way through the session. We'll assemble our political panel coming up. I'm Joe Mathieu alongside Kailey Leinz in Washington. This is Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We are looking at a down Friday here with the Dow, the S&P, NASDAQ all in the red. The SOX, however, has turned around. That is the Philadelphia Stock Exchange Semiconductor Index. We did see weakness in semis for much of the morning, but right now that index is up barely, but up under 0.2%. S&P putting it all in context, setting a baseline down 0.6%, down 47 right now. NASDAQ and the NASDAQ NASDAQ 100 index, both lower. NASDAQ down by about 0.9%. The NASDAQ 100 index down 0.7%. But that SOX is important. Again, up now by just about 0.2%. The VIX right around 18, the 10-year 4.54%, and the 2-year currently yielding 4.17%. Gold up $37 the ounce, up 0.9%. Major move for West Texas Intermediate crude up now at 82.26 a barrel. WTI up by 4.2%. Oil traders certainly watching fast-moving developments in the Middle East. Brent crude 87.69. Barrel of Brent up now by about 4.1%. As we heard from our Mark Gurman, Apple and the Justice Department are in early discussions about settling a 2024 lawsuit that alleges the iPhone maker violated antitrust laws. Apple shares, they do remain lower, down 1.2%. A Meta platform said to be in early discussions to lease computing power from its data centers to Anthropic, a deal that could be worth as much as $10 billion over 2 years, that according to the New York Times. Meta platform shares down 2.5%. Round 2 of the Open Championship underway at the Royal Birkdale Golf Club in Southport, England. At last check, we've got Lucas Herbert of Australia sitting atop the leaderboard at 8 under par. I'm Charlie Pellet, Joe and Kailey. That is a Bloomberg Business Flash.
Charlie Pellet in New York. Thank you so much. I'm Kailey Leinz alongside Joe Mathieu in a smoky Washington, and a Washington, of course, that woke up this morning and started pouring through files that were newly unclassified and announced yesterday by President Trump in a primetime address to the nation that focused on election integrity and what he alleges was Chinese meddling in the 2020 election in particular. It's interesting timing, given just about 2 months from now, the president is expected to host the Chinese President Xi Jinping at the White House on September 24th, the same week, of course, as the United Nations General Assembly will be taking place. And there is the question as to whether or not the president's accusations does affect the U.S. relationship with China, and especially the very, at least stable for now, but still questions as to how it will move forward trade detente between the two countries.
I see where you're going with this. It's tariffs, which is something that we haven't talked about in a while following the Supreme Court's ruling. There's been this sort of opaque, or at least hard for me to understand, process to get refunds. And this is something that we've just recently been talking about in the newsroom, needing to update. Remember when Costco wanted its money back?
Yeah.
This is something that our colleague David Westin is actually investing in and starting to explore, and it's going to be part of this week's Wall Street Week with David Westin, who joins us right now live from New York. David, did Costco ever get its money?
Well, there's been some money given back, I'm happy to report, but a lot of it has not been given back. Yeah. And before we start talking about the next round of tariffs, whether it's China or somebody else, we have to think about cleaning up the mess we had before with those so-called IEEPA tariffs. So we did go back and try to figure out, did those people who paid those tariffs get their money back? We talked to various, particularly smaller businesses who really got hit hard by this. And one of them was Out of the Box Manufacturing, a small business out in Washington State. And Alison Budvarson is the co-founder of that. We asked her specifically how much of her money's been given back and why hasn't she gotten what she expected. And this is part of what she had to say in my conversation with her. Now the Supreme Court has ruled, and there's a fair amount of money, according to press accounts, that has been refunded of those tariffs. How much of that have you realized?
None.
Well, how does that work?
It's pretty frustrating, actually. So I have to contact my vendor, who is in turn waiting for a refund from the shipping company so that I can still pass through that refund to my customer as well. It's just really a big mess all the way around.
But what about now, going forward, putting aside for the moment what's already been paid? Has your business largely returned to where it was before the tariffs?
I want to say it's different. So prior to tariffs and prior to the expiration of R&D tax credits, we did a fair amount of work in R&D. That went away. I believe that the tariffs had the effect of slowing down the pace of innovation because there was so much waiting and unpredictability in components. So that really slowed that process down. The tariffs are not doing anything to move the supply chain in the way that they are intended to move the supply chain. The reason is that the tariffs simply aren't high enough to make it painful enough for behaviors to change. I'm not advocating for higher tariffs. What I would advocate for instead is predictability, stability, and then support to regrow those industries within the United States so that we're treating this problem with a carrot rather than a stick.
Alison Budvarson of Auto Box Manufacturing. We also talked to the wine importer whose name was on the case who actually brought it up. He actually has gotten his money back, but he said nonetheless that those tariffs have changed things forever. And in case you're worried that we'll run out of things to talk about on tariffs, we talked to the woman who runs the public interest law firm out in Chicago who brought these cases on behalf of a lot of small businesses, and they're already preparing them for the so-called 301 tariffs just around the corner. So I'm afraid we're not out of this yet.
Oh, it never ends. David Westin, thank you so much for joining us. Of course, host of Wall Street Week, which airs every Friday after Balance of Power at 6 p.m. Eastern Time here on Bloomberg TV and radio. Now, as we mentioned, the tariff question always looms large when it comes to the U.S.-China relationship in particular. And we just saw a headline cross from NBC as the White House press secretary Caroline Leavitt tells NBC, confirms that Xi Jinping's visit to the United States in September remains on track, even despite the accusations against China and its election meddling, allegedly, that the president wielded last night in his primetime address. And that's what we want to discuss now as we turn to our political panel. Bloomberg Politics contributors Rick Davis and Jeanne Zaino are back with us. Rick, of course, Republican strategist and Stonecourt Capital partner. Jeanne, a Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Welcome to you both. Rick, this was about China 2020 election meddling that the president says some intelligence suggests happened, not necessarily Russia, which we thought we might hear about, even though it's in the documents, or Iran. I just wonder what you make overall of the 25 minutes that the president spoke yesterday evening.
Yeah, I thought his speech kind of echoed the damaging messaging from our adversaries on trying to undermine our democracy. I thought, where did they get this speech written? In Moscow or in Beijing? I mean, it really was stunning to me, the approach that the president took. I mean, look, let's face it. He was elected in 2016 under a cloud of foreign involvement in the elections. He was well briefed on it. The intelligence community was spot on their concerns. They told him all about it. He had an entire administration to do something, and then is somehow now shocked that China was involved in the 2020 elections. I mean, China hacked our computer system in the 2008 election for John McCain. They also hacked Barack Obama's. So it shouldn't shock or surprise anybody that our adversaries want to undermine our democracy. So I just don't get why he is echoing their messaging.
Pretty wild as well to hear him refer to the 2018 elections, Jeanne. That's not been part of the stump speech until now, but suggesting that it too was compromised by China. So what happens when President Xi comes to town? They have an airing of grievances, or could this still be canceled?
I was just thinking about that, Joe, while I'm listening to you and Kailey and David talk about Xi Jinping come. And what is Donald Trump going to do? Sit him down and say, wait a minute, you accessed voter files. Now, I know that those are publicly available, and Jeanne Zaino could get them as well as anybody else in the world, but shame on you. And oh, by the way, this was hidden from me by a deep state that was controlled by a DNI director. Oops, where did he go? Oh, wait, he's now my CIA director. I mean, the whole thing is so absurd. I can't imagine even Donald Trump would raise it to Xi Jinping. So what's he going to do about it? Nothing. He is going to meet with Xi Jinping, I assume. He is going to go on his merry way, and he is going to continue to complain about the 2020 election, the 2018 election. And I think Democrats have this all wrong. I think they should be welcoming this. Last night was an absolute joke, and the only people he enticed to get out to vote in November are Democrats worried about his election meddling. So, you know, I hear when Rick says he's, you know, who wrote this speech? You got to think the Democrats did, because that served no Republican that I can imagine is anywhere in this country.
But does it not, Rick, rev up the president's base at least a little bit, try to get them out to vote in a year where he's not on the ballot?
Well, you know, the portion of the Republican Party or MAGA that believes in this kind of conspiracy theories is you know, whether they turn out or not, they're not going to make a difference in the election, right? They're his base vote. They have to turn out, and it's already factored into the numbers that we're looking at, which include, historic unpopularity and what everyone is predicting, a big shift toward Democrats, certainly in the House and potentially in the Senate. So, yeah, I mean, we already know that. And I don't think it's going to, and there's nothing new that the president put on the table last night in this speech that's going to get anybody more revved up. He talks about it all the time. So what was the difference between having this talk on national television versus every rally that he's done for the last 10 years? So no, I don't think there's really any cause and effect. I would say the one thing I would disagree with Jeanne on, undermining our democracy should not be a partisan issue, right? We should all say that that's a bad thing to do. It's what really the rest of the world hopes to be, and we need to be that shining star. And I know that is, very unorthodox these days to actually be proud of a democracy here in the United States. But I wish the president, who loves to talk about his patriotism, would endorse democracy from time to time.
It's really interesting. As people watched this, as opposed to listen to it, you'd see the president standing alone behind the podium in front of the classic golden drape in the East Room with a couple of American flags. But if they had turned the camera, Jeanne, you would have seen an audience of 55 people. Once again, the president filled the room with supporters. J.D. Vance, Susie Wiles, Marco Rubio, Todd Blanche, Howard Lutnick. I could keep going on. Wright, Duffy, Loeffler. The whole cabinet was there along with other supporters, including Bill Pulte, who many believe generated some of the material for the program last evening. But after the president rapped, this is behind the scenes, there was a big round of applause in the room. This is after the cameras are off. And the pooler who was there said the president joked with the crowd, talked about election fraud, America 250, and other topics for another 20 minutes. You just saw the opening act, Jeanne. What does that tell you about the president's state of mind last night?
I have long said these speeches don't work for Donald Trump. He is much better on the stump. He's much better in front of a live audience. I think his handlers were absolutely right to pack that room as much as they could and to try to give him the sense of speaking live. I think they would have been better off not doing a primetime address and letting him do what he likes to do, which is get up and talk and wind and weave and all those kinds of things. So I think that would have been better. In fact, Joe, anything would have been better than what we saw last night. So that's not really saying a lot.
Wow. Jeez.
Jeanne Zaino, not holding back today, joined by Rick Davis, our political panel on this Friday. Thank you, as always, for joining us here on Balance of Power on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ holding in the red right now. Chip makers, though, bouncing after a plunge right to the edge of a bear market. We've got the SOX, the Philadelphia Stock Exchange Index, has been swinging between gains and losses. Right now it is lower, little change. Perhaps the key takeaway at this hour, the SOX now down by about 0.2%. S&P down 50, 74.83 where we stand on this Friday afternoon, down by about 0.7%. We have got the Dow Industrials down 230, a decline there of 0.4%. The NASDAQ Composite Index down 0.9, NASDAQ 100 down 0.8%. The VIX right at 18, the 10-year 4.54%, the 2-year 4.17%. Spot gold now higher by 0.9%, 4,010 the ounce. Yesterday we did have spot gold below 4,000. West Texas Intermediate Crude 82.29 a barrel. WTI up 4.2%. Barrel of Brent 87.82. Brent crude up by about 4.3%. Among the economic reports out this morning, housing starts in the U.S. surged in June after a sharp drop a month earlier, driven by a rebound in apartment construction. Among some of the home building names, we do have shares of Toll Brothers today. They are trading lower. We've got Toll now down by just about 2.4%. Lennar lower by 2.8%. Pulte Home trading down by 2.3%. Round 2 of the Open Championship underway at the Royal Birkdale Golf Club in Southport, England. At last check, we do have Lucas Herbert of Australia 8 under par, sitting atop the leaderboard. I'm Charlie Pellet. That's a Bloomberg Business Flash. Now back to Smoky Washington. Once again, Joe Mathieu and Kailey Leinz.
Smoky indeed, Charlie Pellet, though, of course, you had to experience that in New York yesterday. Millions across the country, frankly, are experiencing it due to those wildfires in Canada and northern Minnesota as well. It is truly quite a moment that we are in. Speaking of moments that we are in, remember the DeepSeek moment from last year and this concern that China was going to make advances on cheaper artificial intelligence and the things that power it and potentially disrupt the U.S. companies involved in this space? Well, now apparently we're in a Kimi moment, or perhaps a moonshot moment, as we have fresh reporting today, Joe, on a surprise breakthrough from Moonshot, which is a Chinese AI startup, and its new model, the Kimi K3, which the company says rivals the strongest offerings from OpenAI and Anthropic.
What could be bad with something called Kimi? It sounds so not threatening. But indeed, this massive new AI model has just gone to the top of the heap here, beating Anthropic's Fable 5, OpenAI's GPT 5.6 Sol in front-end coding tests run by AI evaluator Arena. This has upset the space once again. We call it a moonshot. It's maybe another Sputnik moment for China, and that's why we want to spend some time with Shep, who's with us right now in our studio. Mike Shepard, Senior Editor, Technology and Strategic Industries. This all comes down to the U.S.-China AI race. And if you ask Anthropic, they say China's taken technology from us to lead the way, but of course that doesn't prevent them from winning. How important is this development?
Well, this really is another, as you said, moonshot moment, DeepSeek moment, Sputnik moment. You can call it what
That's a big
you
deal.
will, but it really is another step-level change in China's effort to not only keep up with the U.S., but really assert its own global dominance in this space. And yesterday we did see Xi Jinping, the president of China, lay out his vision and his country's vision for trying to assert that leadership worldwide, calling for a more open and accessible approach for artificial intelligence, one that would be available more widely to the global south, which has long been felt left behind by technological advances in the past, and AI is no exception there. And this development really just punctuated that argument for Xi.
So is this evidence that export controls that are meant in part to hold China back in strategic technology like artificial intelligence aren't working as effectively as the administration would hope?
Well, that's a great question, Kailey, because the U.S. really has cracked down on making the cutting-edge chips needed to power the training and an actual operation of advanced frontier models as they're known. And to some extent, yeah, that has worked. We haven't seen nearly as many NVIDIA chips get to China. Some have managed to sneak through smuggling and other manners, but really you don't see vast data centers powered by NVIDIA chips in China. But one of the issues that the top labs in Silicon Valley have raised is that, look, in China, they are essentially taking our models, running them improperly at a mass scale through a process known as distillation, and then using the results to build rival chatbots that undercut us. They undercut us on cost, and that means that all that we have spent here in the U.S. To build those data centers here is actually backing China's developments.
Moonshot says it's going to release Kimi as an open weight model before the end of this month. How does that separate it from these sort of frontier models that we talk about so often here in the US?
This really gets to the different approaches that China and the U.S. have kind of picked so far. The labs here in the U.S. have really pushed what's called a closed weight model. In other words, they keep the program, the software, the product on their servers or on servers that they lease or rent. And you pay to access it through an API or through a website. And sort of like if you sign up for Claude, that's kind of what you're doing. With something like DeepSeek's R1 or with the newer product from Moonshot, Kimi K3, you would actually be able to download the model on your own server. Now, what that would mean, Joe, in this case, though, if you wanted to get K3, you and I would have to put together probably $500,000 to $1 million to buy a server big enough to run it.
Wow.
So
do you need Blackwell to run this? Or?
You would need some really powerful server space. If not Blackwell, then maybe a whole lot of Huawei chips, for instance, maybe many more stacked up. But the idea is that you would then be able to download it and run it. Now, some of the other open weight models that have been distilled or broken down for smaller, very specific purposes don't require nearly as much server space. But just in this particular instance, you would need a lot of volume and computing power to run it.
Well, I know I asked you about export controls on chips, but we also saw the slapping on of export controls for some of these models over concern that they could be jailbroken. Do we have a sense as to whether Kimi or frankly any AI model coming out of China has those kind of capabilities or have been able to copy the cyber capabilities of U.S. models?
And this is one of the most urgent questions surrounding these, and this is why Anthropic really reined in the distribution of Mythos back in April, and why the government really tapped the brakes in June on wider releases of Fable 5 and Mythos 5. That has since, those restrictions have since been pulled back. But you also see actually in China discussions of the same kinds of restrictions on models developed there. They are also worried about security and safety, and this is something that came up in Xi Jinping's speech yesterday, that they want to make sure that there are some guardrails in place. Of course, just like here in the US, what those guardrails look like, how they take shape, which companies they target, and what kinds of capabilities are they specifically seeking to rein in, that also remains unclear too. And we're going to have to see how that develops. Xi Jinping also called for more cooperation on AI. And now with the president's speech last night, not exactly the U.S. president's speech last night, that was not exactly an olive branch to China. And it really risks precluding any kind of cooperation in this area.
All right. Our senior editor for technology and strategic industries, Michael Shepard, thank you so much, as always, for joining us. And of course, these concerns around potentially cheaper Chinese AI undercutting U.S. companies and U.S. capex in this space is what led chip stocks to be near a bear market at one point in the session. We've rebounded a bit, though the stocks is still down just about 0.1%. Where we're seeing larger moves today, though, is in the oil spaces. WTI and Brent are both up in the ballpark of 4.5% on what is escalating strikes between the U.S. and Iran in the Middle East. And that's where we go next as we turn to Rebecca Babin, a senior equity trader and managing director at CIBC Private Wealth. Rebecca, welcome back to Bloomberg TV and radio. Right now, we're around $88 on Brent, 82 on WTI. If we continue to see this escalation and widening of targets that are being hit, how high could these numbers go?
Thanks, Katie. So I think when we look at the escalation, we need to be really careful of how it plays out. I think the way we go back to, I would say, over $100 a barrel in crude is if the Houthis engage in this conflict, which they have not done so far, and start to target flows that are being rerouted from the Strait of Hormuz into the Red Sea through the port of Yanbu. That would be a very significant escalation and would definitely cause crude to re-rate higher, I think closer to that $95 to $100 a barrel. The second thing that we could see that would spark a rally back to those prices would be if Iran starts to target regional energy infrastructure, including refineries, which they had hit at the beginning of the conflict, or other kind of production facilities. LNG facilities have also been targeted. So I think those are the two kind of flags that the market is looking for, or two signals to say, okay, we need to reprice higher than this high 80s into the kind of high 90s, low 100s. At this point, I think, unless we see that, I think we stay within this kind of 80 to 90 range, as the market has become a little bit conditioned to the fact that these negotiations and escalations can be ebbs and flows and transits and can be dialed back very quickly. And that when they do dial back, the market immediately goes from pricing scarcity, which we're starting to see now, to pricing surplus, which is what we did about 2 weeks ago when we traded back down to around 70.
Everyone's talking about crack spreads at home like they're energy analysts these days, Rebecca. And I'm curious your thoughts on gasoline. We're at $3.98 today. I suspect we wake up to $4 a gallon next week. Is that going to be the price for the summer? And when you look at diesel, do we hold over $5?
Yeah, so you're so right. The crack spreads are the kind of hot topic these days. And listen, there's a reason for it. We have lost about 5% of our refinery utilization through the course of this conflict, as well as in Russia, as well as China reducing their refining utilization. So we have in products here a situation where supply is reduced, demand hasn't come off the way you would have expected with the kind of prices we've seen, and we don't have the buffers that we have in crude in place for products. So yes, I do think at least over the course of the next month, when summer driving season is still in full effect, prices will be around $4 gasoline and $5 diesel. I don't see that reverting quickly, even if we start to see some flows come through Hormuz, just because the Russia constraints have really put another kind of tightening screw into the product market. And the U.S. refiners are running flat out, 96% right now. They are doing everything they can to supply the market and take advantage of these crack spreads. We just don't have a lot of spare slack in the refining system. So I don't see those backing off at least till late fall, and if flows start to resume through Hormuz.
Well, I'm glad you mentioned Russia, Rebecca, because obviously they've seen a number of refineries hit by Ukrainian drones. They banned exporting diesel as a result. And now we have a live conversation on Capitol Hill, a reinvigorated push to pass a Russia sanctions package due to the death of the architect of that, late Senator Lindsey Graham, which would allow for the president to tariff up to 100% countries that purchase Russian energy products. If that goes through and you therefore see less of a desire to buy Russian crude and product on the market, what could the impact of that be?
That's a great question. And the way I'd frame this is Russia, even under the most stringent sanctions package, was able to get crude out to the market through their shadow fleet. So it does sound extreme when we read the headline, and it would absolutely tighten the market. We've had some Russian sanction waivers in place throughout this conflict. They've since been unwound. This would be more aggressive. It would tighten the market, but I don't think it would completely take Russian exports to zero. I think they would continue to find ways to get barrels in the market, and there are buyers that will buy discounted crude, China and India in particular. One reason China has dialed back its imports of crude has been the fact that there aren't as many discounted barrels of Russian crude available. They used to get these discounts under this when they were sanctioned of the kind of dark barrels, and they haven't been able to access that. So it would absolutely tighten the market. I would say would probably add another $5 a premium into the price, but it wouldn't necessarily mean we see a full reduction of exports. The market has become fairly resilient under sanctions regimes, and it all comes down to enforcement, and you have to be willing to spend the money to enforce those sanctions.
It's great to have you back on the program, Rebecca. The senior equity trader, managing director, CIBC Private Wealth, Rebecca Babin. Thank you so much for the insights. And when you look at the stocks involved here, Kailey, think back to what Rebecca said about the refiners. Marathon and Valero both hitting all-time highs today, even as the integrated oils pulled back. This could be a real trend for them for months going forward.
Yeah, it certainly could. And of course, we'll have a cleaner look on what the ultimate close of the trade today looks like in the late edition of Balance of Power from a smoky Washington here on Bloomberg.